What's up, traders? It's me, the FX Lord, and my partner right here. Welcome to this week's Forex market analysis. We will be analyzing a few currency pairs for you guys so that you will get better position for profitability this coming week. Remember, our goal is to ensure that we help you guys become better at trading and also attain consistent profitability. Now, let's get started. All right, guys, welcome back. So we'll be analyzing a few currency pairs for you guys. Our selection for this week will be GBPUSD. Which other one?
USDJPY.
Okay, we'll be doing USDJPY as well for them. Euro USD and USDCHF. Oh, that would be great. So we'll be analyzing these currency pairs for you. So I'm going to start with GBPUSD, show you how we do our top-down analysis following the market structure rules. So, and my partner right here is going to take up the next currency pair for you guys. So, pay rapt attention and follow suit. Okay, first of all, let's go to our environment for analysis, and that would be tradingview.com. Okay, so we are right there. So we now move to the chart environment. We're going to keep this analysis short and simple for you guys, and you see how we look at the market for every beginning of the week, so we can better position ourselves to make the right entries and the right trades. So GBPUSD right there. Great. So here it is. Let me clear out the screen. So what I'm going to do right now is I'm going to take you all back to the monthly. Let's see. So what I'm going to do at the monthly time frame is to identify major support and resistance zones. All right. So right here is what I have on the monthly. I'm going to zoom it up a little bit so we can see it better. Okay. Okay, that's good. I think this is enough. So the very first thing I will try to do is to track the market, track the current price. All right. So you can see the current price right here, which is at 1.37023. So I'm going to identify major support and resistance zones. My major aim here is to trap this current price between a support and a resistance zone. So I'll just pick up my tool right here. I'll take up my rectangle tool, and I see a very big support right here. Okay, big support right here is a strong one. As you can see, it goes back all the way to around 2016. Okay, that's it. So it's a nice one, but there are other support zones before it. I see another one right here. You can see right here, this month, and this month, found a support right here. You see that? Great. So I marked that out as well. Then we see another support zone. Okay, let's take a look at resistances. All right. So I see a resistance zone right here. I see a resistance zone right here. Okay, good. And when a resistance is broken, it becomes a support. So this resistance zone here is quite a strong one. It dates back, as you can see right here, 1st of January 2019, all the way to 2020, right there. So I've identified this. So this right here can also be a zone where price can retest once it hits it. So the next thing I want to do now is to identify the resistance zones that will help me trap this current market price. This is a very good resistance. As you can see, both the bullish candle and the bearish candle found a resistance right there because they started rejecting. You see these huge rejections right here. You know, this is actually the monthly chart. So for you to see those rejections tells you something really huge, that market finds a very strong resistance at those zones. So that's it. If we're able to project it back, you see that those zones also cover up here as well. So having got this, I would also not ignore this tiny zone right here, which is exactly where this market price is. All right, you see right here, you have this particular green candle. It hits here, rejects, and this particular one also rejects there. This also is a very big zone of resistance. So I'm going to mount that right here. So what I've succeeded in doing so far is trapping these market prices, or rather the current market price in this zone. Once I've done this, I will now go down to the weekly. You see, we did not do any major market structure analysis in this. So go down to the weekly, and if I go down to the weekly, I see that those zones that I've marked are actually very valid zones, as you can see them right here. Very, very valid zones. So what I would like to see is if there are actually other zones in between them. As you can see, I don't see any. They also are the active zones. You can see that this particular zone we've marked at the monthly time frame is a very big support zone, as these two candles here on the weekly actually hit on it and got rejected. All right, so this gives us an insight, the first insight of what the market is trying to do. All right, so let's take a look at the daily. The daily now, we want to actually mark out some further zones as well for ourselves. So we go down to the daily right here. All right, so see what we have right here on the daily. You can see some other zones have exposed themselves. All right, so you can see right here, this is a good resistance zone as well, because you have these two candles rejecting right there. So wherever you have these strong rejections of prices, mark them out, because your aim right here as a day trader, you are trying to capture a few picks for the day. So your most interest is where the price is really happening. Try to trap those zones, all right, at the upper side and at the lower side. That is their resistance and support zones respectively. So I have done that. I also see some very good zone right here. This is also another resistance zone. All right, so I'm just going to clone this particular tool right here. Okay, so I clone it and then push it down to this. I clicked on the wrong one. That's it right here. Awesome, beautiful. So we've now come to a point where we've been able to get this zone here and this zone right here. All right, trapping the current price, a support zone here and the resistance zone. So having done this on the daily, the next time frame I will now go to analyze the market structure for us day traders is the 4-hour candle. All right, so I will now move straight to the 4-hour candle. Okay, so getting to the 4-hour candle, we can now check out what the market structure is currently doing. All right, so if you take a look at this, you can see market structure is already downtrending. We had a very good, nice ride at this zone. Okay, we had a nice ride at this zone. Let me just increase this the peg zones of this slide so it becomes better looking. Okay, so we had very good nice uptrend right here. All right, but as you guys can see, this uptrend got broken right here. Got broken, retested, all right, formed a seemingly double top. You see this zone here, very strong resistance zone. It now went down, came back to that zone, went down again, came back to that zone, and then ensued on a downtrend. So we can even pick on the downtrend that we saw right here, trying to connect the, of course, you guys know how to mark out your market structure, trying to join as many lower highs as possible for a downtrend, and of course, your higher lows for your uptrends. So I have a lower high here, a high rather, a lower high and another lower high. I try to project it all outward. Okay, so I have this. So right here, I got a break of this particular trend line, right? So this is the last lower high before this break. So I'm just going to put a resistance zone on this area, because the market, once it went down here forming a lower low, it went up here, went down before it now moved finally up. So this zone, which was the last lower high, is where I actually put a horizontal line across. All right, so I put that horizontal line across. Let me get it. And just like we expected, once the market breaks our trend line, what do we expect it to do? We expect it to come back to retest. All right, and it did just so right here. And once it retested, it starts moving up in an uptrend, right? However, this uptrend didn't really last long. As you can see, it hit some very strong resistance zones and then descended downwards. And on this descent down, you can see it also broke our trend line that would have meant for the uptrend right here, as you can see here. So you see, we got it broken from this zone. It broke. This was the last high. All right. You can check it out here. This zone, which we've already marked out using our resistance zone, you can also mark it out right here with a singular line. You can see once it broke our trend line, our uptrend line, it also came back to retest this last higher high for this uptrend. Is that also? And after that, it now went on its descent. All right. So this zone that we find the price currently at now, we see that it's making lower highs and lower lows, showing that the GBPUSD is currently on a downtrend. But we have to be very careful right here. Let's see what happens if we put our trend line showing that it's now going on a downtrend, right? We have to be very careful here. So what you see here is that this previous zone, which we identified on the higher time frame, I think this was supposed to be on the monthly. All right, this shows a very major support zone, and you can see this particular candle right here. Once it hits here, it actually pulls back up, forming a hammer. I think this candle still right here is a hammer, showing this huge rejection right here. The second candle also showed a huge rejection right here. So normally, we are expecting this candle to continue down. However, we need to be very careful as it has hit a very huge rejection zone, which is a support zone, right? So if this coming week, starting tomorrow, if this market could actually break down this zone in this manner, sorry, I need to use a different tool. Let me use an arrow for this right here. Okay. So we'll have to keep a look at this. We are projecting that this market should come down as it portrayed right here. However, we see a very huge support zone here. So the expectation is that it should actually reject. It should actually reject this particular zone. So this red candle currently forming tells us market is going to go down, right? But for it to successfully go down, we expect it to break this particular zone successfully, right? And it also needs to do what? It also needs to come back to this zone to retest. And this is where we'll be waiting for our entry. And once it retests, we are very certain that we are going to take on the next ride down. So while we are looking and expecting this, we should also be very, very cautious of the fact that being a very huge resistance, if we don't have this support zone here, we would have said unequivocally that the market will have a free fall down here, all right? However, because of this support zone, we believe that the market will definitely reject. It's going to reject away from this support zone unless the bearish pressure is very huge. All right? Unless the bearish pressure is very huge. Another expectation we'll be looking out for in this market is this. On this rejection, it's most likely going to break this trend line, all right? It's most likely going to break this trend line right here. So once it breaks it, we're not going to react immediately. We will now wait for it to come back to retest on this zone. Once it retests on this zone, we will now get a bullish signal, all right? We get a bullish signal which we can get from our candlestick patterns for us to make the right entry and then ride the next wave all the way up. And our target for this movement is actually going to be, at least our first take profit target is going to be right here, because we know that there will be some rejections here, since this also is a resistance zone, all right? So our first take profit is going to be right there. I'm going to write it out. So these are our expectations for the next week coming tomorrow. So this is our what we call our TP1. So I'm going to put it out there for you guys. So this is our TP1. All right. Great. Then if we have a successful break right here, so our TP2 will now be the next resistance zone. All right. That is from here right down to this level. So this will be our TP2. Okay, so that will really be enough for a good day or a swing trade for us, because if we were to measure it from there, we're going to see, I'm going to do the measurement now and see how many potential pips that can be for us. Okay, so right here we have our TP2, and that's it. Great. So our potential take profit should be from the first one here around this zone. We should be expecting, that's really huge, as you guys can see. This is around 96 pips, so 100 and something pips. That's 103 pips right here. And the second zone should amount to over 180 pips. So these are very huge on the upside. However, if we have this break on this zone on the downside, we know we are going to ride the wave all the way down here. Now, as a final way to augment this, we need to now look for divergences, okay? We need to now look for divergences to see if this bearish pressure is getting exhausted and then having more expectation on the upside. So I'm going to put in my MACD. It's a favorite tool I use. Favorite tool I use for marking out my divergences. All right. So right here we have my MACD tool. Okay. So let me get this down a little bit. Awesome. Okay. Now, do you guys see something here? Do you guys see something? You will observe that even though we can't spot a divergence from any of these zones really down, but you can see something peculiar here, that the bearish pressure is decreasing. Do you see that? You can see here the peak has been reached and it is gradually what? Decreasing. I think that can also pass as a divergence, because if you take a look here, right? If you take a look here, this is actually going down in this direction, even though the market is actually, this is actually going up in this direction, even though the market is trending down, correct? You can see that right here. You have where the impulse moves are, which gave you a huge bearish pressure, but the pressure keeps decreasing, where you now see the peaks of these bar charts kept on, decreasing in value, or in size, or in height rather. And this also shows us that there is a very high tendency there will be a huge rejection on this particular zone that we've marked out here, giving us more of an upward movement than a downward movement. So there is most likely going to be a breakout here. So we'll be looking at the market for these instances and these signals. So currently I will give the upside from what I've seen right here. I'm going to give the upside a 70% that the market is most likely going to break to start moving up. All right. And I'm going to give the downward side a 30%. All right. So this is it for the GBP USD analysis, and I think as the week unfolds, any of these predictions that we've made, once any one of them unravels, we can now hit straight into the market and, of course, catch the profits, because pips do what? Pay our bills, guys. All right, so that's why I'm going to call it quits for the GBPUSD analysis, and I'm going to let my partner move over to the next one, which will be, what will you be analyzing?
USDCHF.
USDCHF. All right, let's make way for him now to take over on the USDCHF. All right, thank you guys, and hold on for the next set of analysis.
Good day, traders. We are moving to the next currency pair, which is, I actually love this currency pair so much. Is the USDCHF. So I'm just going to go there. USDCHF. Alright, so I'm just going to clean up the chart so we can have a fresh start. So guys, my analysis will be very simple. I'm going to be using some terms. If you don't know, if you are not very good with an analysis, you find it hard. That is why we are creating a course which will soon be rolled out soon for you guys, for those that are still learning how to analyze, because there are some terms I'm going to use, some tools, special tools that are golden in Forex. You don't these tools, you don't joke with them. Tools like the Fibonacci, that's one of them. I'm going to use it here today to show you guys how the market will unfold this coming week. So my analysis are very simple. I don't confuse people, you know. I'm going to make it as simple as possible. So we are going to start with we are going to go down to the daily, and let's see what's happening down on the daily. I'm trying to make it easier for you guys to see. So we are going to be looking at the current market. Can you hear what I said? The current market. We are not going all the way down back to 19. So we are going to start at the current market. So what do we notice at the current market? We are going to start marking up our resistance and our support lines, because that's mandatory. Do you hear what I said? It's mandatory. You don't trade without your resistance and your support line, because that's what guides you on where to enter trades and exit. So I'm marking up those important points of structure for us to see please be patient with me. I'm just trying to put the resistance and the support lines for you guys so you guys can see. Okay guys, all right, we are back. All right. So that's on the daily, and let's put one more, just one more, so I don't complicate the chart, so that you guys don't see multiple things. So That's the last one. Okay, so if you look right on this line right here, you see that this is a very important point of structure. You see the market retesting on that particular line, retesting on it. Even if you go way back, you see retesting on it. We are looking at the point marker, but let me show you how significant that line is. You see right here, that's another retest. So that's a very important point of structure. So going back to the current market, now you look at this particular line, so you see a lot of retest on that line, an important point of structure. These are the things you should be looking out in the market before you place any trade or do any analysis. These are the key things you look out for. So we are going down to the 4 hours. I just moved from the daily to the 4 hours now for the analysis. Now you can see that the market was trending down to this point of structure, forming, giving the market a support. So you see previously going backward, you see we tested here, we tested a support, the market is a support on that same line. So for what we are going to be expecting this week, this is a very important point of structure. The market is going to continue upward. Let me show you guys what I'm talking about. Like I told you, my analysis are very simple, and this is how logical you're supposed to be when making your analysis. Now, what we are going to be expecting this week is if this market breaks this line, so if it breaks, it's heading next to this point. Now we are going to wait for, before we can say the market is going to continue down, we are going to wait for a retest on that particular point after it has broken it. Then, and at this point, you wait for your reversal candlesticks to be sure that the market is going to continue down. Now, I'm an aggressive trader. Once at this point, I see rejection candlesticks like the inverted hammer, the spinning tops, your bearish engulfing, shooting star, your bullish around me, I enter the trade immediately. Now, I'm an aggressive trader. That's why I will enter the market, because it gives me a nice let me show you guys. It gives me a nice risk to reward. See, I'm going to put my stop loss right here, just above it. You know why I'm going to do that? Because I know that if the market should break, then there's a 90% chance that there's going to be the market is going to continue upward. So I'm going to take a little loss. You see that I'm very close to that support line, but if the market doesn't break it, then you see the market is going all the way down, giving me a very nice risk to reward. So that's everybody has the way they trade. This is how I do my own, but you can choose not to enter. You can choose to wait for the market to. What I advise upcoming traders is, don't commit to the market until the market commits to you. What do I mean by that? See what I mean by that. You don't enter this market until you see this reversal candlesticks and the market has pushed down a bit. Somewhere around here, you take your entry. Then you can put your stop loss anywhere around upward here. Then you are sure the market is going down. You are now sure that this market is moving downward. Now, that is the first scenario. What of in a scenario where the market doesn't break the support line? What do we expect? We expect for the market to push all the way up. Now, for my judgment, I know that this market has a 90% chance of going upward. In fact, let me say a 99% chance of moving upward from our in-depth analysis, which if you want to learn how to do that, you have to wait for us to roll out our courses. Is in-depth analysis, which we use is for people who will register for our course. So, like, looking at this market now, I'm sure it's going to move up. Like, I have a 99% chance that this market is going to move up. But I'm not going to enter the market until the market commits to me. You understand? So there are two scenarios here. We are looking for the market to break here and retest and continue downwards. Or if there's a reversal here, now see what the market is going to do. See how you're going to look. See how you're going to look for your entry on this particular market. If the market starts going up, you don't enter the market. What you do is you look for if the market goes up from here. This is an important point of structure. Why do I say that? Look at this point. Let me show you guys. I like to outline everything so that you see what I'm talking about. See this point? That's the first point. You see this point? What are you seeing there? An important point of structure. The market is testing at that particular level. So we are going to expect this market to come to this level. Then we are going to have a pullback. We are going to have a pullback. Once it pulls back, then you expect the market to move up. Now, what is your entry? What are you going to look out for entering this market? At this particular point, you are going to be looking for reversal candlesticks. Now, you guys, a lot of people don't know their candlesticks. It's very, very important. You should go back and look at your candlesticks and know what they mean, know what each patterns mean, know what the candlestick, because every candlestick tells a story. You should know what your candlestick is telling you at this particular point. If you see rejections, then you should know that the market is going to move up. Then at that point, you take your trade. So for USDCHF for the coming week, we're expecting two things to happen: for there to be a break and continue downwards. But for me, a 99% chance that the market is going to continue upward due to in-depth analysis, which those that will get our course, you will see what I'm talking about. In-depth analysis, waves analysis, which is going to are going to be explained in our courses. It's actually a very nice thing to learn. It's a skill that will really take you far. So what are we expecting this week? These two scenarios, and where will be our take profit? Where should we target as our first and our second TP? Our first and second TP, if you look at the market, you should notice here too, around this zone here, that let me show you guys what I'm talking about. Around this zone here, you see these points, an important strong point of structure. The market came there, retested and left immediately. See that point? See, I'm marking this out so you see where I'm drawing my conclusions for. I don't want you to think I'm just drawing conclusions out from the blues. So these are the things that gives me my conclusions. Now, what are we expecting? We're expecting for the market to, how do I say, to come around here. Let me show you guys our first TP. First TP is going to be. Let me clean up the market a bit so that let me clean up the chart a bit so that you will see what's happening. Sorry guys, I'm doing this for you to actually have a clear picture of what I want to show you. So this is going to be our first TP. Then our second TP. Our second TP is also going to.
Thank you so much, Ifeanyi, for that wonderful
analysis of USDCHF. I mean, guys, you see, this is how we do it here for you guys, week after week. You know, we grind the way to make sure that you guys become successful in Forex trading. Forget about the naysayers that tell you can't do it. We are right here for you. Remember, at the outset, we told you we'll be analyzing 4 currency pairs. Yes, we gave you guys 2 free, and the remaining 2 are specifically reserved for our premium students. All right, so we're going to send that to our group. We have a group, a Telegram group. Yes, we have a Telegram group. We call it the Pip Scraper free Forex signals. All right, we also have the Pip Scraper premium Forex signals. So this is where we get every single one of our students updated with what the markets are doing and how the markets will unfold. All right, so our students are really making it, and we want you to be one of them. We're actually rolling out the course for you guys pretty soon that is going to lace you guys up, that is going to get you fixed when it comes to analyzing the forex market, and most importantly, the ability to trade the forex market like a professional. That's very important, because at some point there's a difference between analysis and trading. All right, so we have to learn the risk management part of it, learn the psychological part of it, master all these, articulate them together to become a really profitable forex trader. All right, so we got you guys, and we enjoyed this. We'll have to see how the markets unfolds. Remember, we've just given you guys the overviews. We're going to go straight to our Telegram group, and it's right there. We can now analyze the market as they unfold and now give our traders the exact entries for their trades, also the right stop losses and the take profit levels for them. So this is where we end it for today. I'll see you guys in our next video. But please don't forget to like, subscribe, and share to your friends. Thank you so much, guys, and see you next time.